If you're looking for cheap stocks, UBS and Guggenheim Partners have a little advice. Buy those oil companies. They're trading at their cheapest valuation in at least 14 years. And that's even as earnings in the industry may fall 48% this year. Bloomberg reporter Eric Martin joins us now to tell us what stocks they're buying and why energy shares have underperformed the market so far this year. Now, Eric, thanks for joining us. Why are the oil markets trading so inexpensively?
What we've seen is that these oil stocks sold off tremendously over the past year and the last 6 months of 2008, from around $147 a barrel to almost $30 in December. And with oil trading off, we also saw the energy stocks pummeled. Ned Davis Research has done some reporting in terms of what's happened at the end of the past 5 recessions, and finding that as those recessions ended, energy companies led the way out, gaining an average of 13% over the next 6 months. So really a great place to invest if we think the economy is improving from here.
So why are the earnings in the industry expected to falter?
Well, these earnings are reflecting partly something that's already kind of baked into the scenario, which is this fall that we've seen in oil prices. But even last year, we saw 4 of the most profitable companies in the world, Exxon, Chevron, Royal Dutch Shell, and another, were all energy companies. And so these are really a place where you can still get a lot of positive cash flow. They're also returning more money to investors in terms of dividend yield than any other industry in the MSCI World benchmark. So really just a solid place to be investing right now.
Okay, and what about emerging economies? How do they play into this? Is it a solid place for them?
Absolutely. The emerging story and the idea of consumption from those economies growing is definitely part of this story. We're seeing China is estimated to grow still at 8% this year, and really just all of that demand being put on the market. As a lot of oil analysts say, there are new fields and new deposits discovered, but at the end of the day, they're not making any more of it. So it's something that is a limited supply, and the world still needs more.
What's going to happen if there is no increased demand for oil?
I think that we're seeing some alternative energy programs that are certainly starting to catch attention. But I don't think anyone is expecting the emerging economies to completely slow down. Places like Russia, Brazil, India still growing. This great wealth effect we're seeing of people moving from the rural areas into the urban ones and buying cars for the first time. This ramping up in industrial production in those countries, using oil as a fuel. And so I really think that for most of the people we talk to, they're expecting this to be a big boost to demand.
Okay, really low valuations for oil, but thanks for explaining this to us. Eric Martin from Bloomberg News. Appreciate it.